Hello, people. This is the second video reference to Chapter 7, actually Chapter 8 as well to some extent. We left off with that previous video with a slightly different problem, different numbers and some similar names. However, we're going to be working off of this half-completed payroll register in terms of using it to complete the rest of the register, which I had noted before, typically is spread right across the whole thing. Now, the next portion of the register deals with the deductions. As we mentioned, that the top part here deals with the gross pay. The bottom part now calculates the deductions for each employee and the totals and each person's net pay for the particular pay period. Now, the income taxes, that's the federal income taxes, FIT, federal income taxes withheld, have already been calculated for you, and they typically are in a computerized system. You may see in the book some charts that show you how much to deduct depending on the person's marital status, single or married, and the number of exemptions that they claim. For example, this guy's married. You know, the progression of the taxes withheld changes between single and married people, and an exemption is a legal deduction that you get for yourself and anybody that you support, which you could call a dependent, and that person would have to qualify. And I think the deductions per dependent are about 50, 55, 56, I'm not even sure, 4,000, it leaves me for the moment. But anyway, so the more exemptions you claim, okay, more dependents you have, the smaller amount of the income taxes will be withheld. And the reason for that is because you're going to be doing a deduction on your tax return, which will lower your income taxes. The more dependents you have, you pay less amount of taxes. Therefore, the less amount needs to be withheld in order to complete the pay-as-you-go system. You can be aggressive and say you have nobody, not even yourself, and have very little tax, very much tax taken out. And people that do that will usually get a large refund. It's sort of a false way of saving money. But this is single 0, married 3, single 1. When the computer system is used, these are all input to the system along with the earnings per period, so that the computer knows exactly, according to the percentages established by the Internal Revenue Service, how much should be withheld from that person's pay. So what I did for you is, you're going to have to do it in your problem 7.3, but I just popped these figures in here and total them. You're going to have to do the same thing. You're going to copy the 4 numbers in and get the total. Now, don't let these 2 columns confuse you for now, but the employer also has to pay taxes for unemployment taxes, both for the federal and the state. Massachusetts has a state income tax. These are irrelevant in this particular problem. This problem deals only with the employee's obligation to have taxes withheld by the employer. And this will come later, the calculation of federal unemployment and state unemployment taxes, which are separate taxes levied on the employer that must be paid separately. Now, the FICA, it's F-I-C-A. Do they use that? Yes, they do. That stands for Federal Insurance Contributions Act, which was put into law back in the 1930s. 30s to provide a Social Security income at that time, for the most part, because people had no pensions. During the Depression of the 1930s, people lost their jobs. There was no, the old folks had nothing to retire on, and it was a horrible situation. So during that historical period, these laws were put into place, which are still in place. They're supposed to be hurting because there's so many older folks now collecting, and there are fewer of you that are working. So all I can say is I hope more and more people work and start contributing. I might not be around when it gets cut. They're talking about it being good till 2033. I don't know. But anyway, the OAS, the FICA, is broken into two components. The first is referred to as OASDI, which stands for Old Age and Survivors and Disability Insurance. The OA is the Social Security that I collect, or that your mom and dad collect if they've retired, or your grandparents collect if they've retired. They get a Social Security pension. Unfortunately, some people, spouses, one of the spouses passes away, and the remaining spouse, or at least the children, are entitled to a survivor's benefit from the FICA system. And the rest of it has to do with if somebody is otherwise eligible for FICA and they become disabled on the job, they can collect some disability insurance if they're not able to work. Be that as it may, the current rate is 6.2% of every dollar that an employee earns. An assumed cap here, ceiling cap, top, okay, is $117,000, which means it's a little more than that, I think, for 2016. It might be 118, 119. I haven't checked, but this is close enough for government work, so to speak. All right, so what this means is once an employee goes over, if somebody works, for example, and has a $150,000 salary, and once that person hits the 117 during a calendar year, then the tax is not withheld any longer. So that's why we keep accumulations on prior earnings, because once anybody goes over that 117 cap, then the cutoff point is at that 117, and the payroll system will no longer deduct the 6.2. Okay, so, but everybody here, obviously, with their year-to-date earnings is well under the 117 cap, so that the 6.2% tax will apply to everybody's gross pay as a deduction from everybody's gross pay. The other part of FICA is the Medicare. Everybody has to pay Medicare, even public employees. So that's a rate of 1.45%, and there's no limit on the amount of earnings upon which that tax is levied. You earn $500,000 a year, you're still going to pay into the Medicare at 0.0145 in your calculator, or 1.45%. Okay, so that never goes away to anybody, and even state and city workers pay it as well now in the past few years. It's of course, state and city employees pay into their own social retirement system, so they generally are not subject to the 6.2%. But if you're in private enterprise, you pay this, and that earns you the right to collect. So state and city employees don't collect Social Security unless they've worked in private industry as well. And that's a long story also. They can get cut back because they earn a public pension, even if they did work for private industry, there's an offset which would reduce their Social Security benefits. Save that for another day. They're telling you that the income tax has already been calculated. We've already talked about that. Each employee contributes $35 for health insurance. Over time, we already got that in there from the top part. Now, what I did over here, you're going to have to do this when you complete the problem, but these two people, Cruz and Chen, are office employees, so that when you take the rest of your register, you have to categorize the employees as to what cost center they work in. So you have office employees and you have sales staff. The sum of the gross earnings, and that's what these figures are, 1155, 1068, right? Those are office salaries, and the sales salaries are the other 442 and the 1075, as you can see. I plugged those numbers in for you to speed up this process. Now, I just want you to note that if I took the 2223 and added the 1517, that would come out to 3,740. So the total gross pay expense is divided over two debits to two separate expense accounts. Office salaries expense, 2223, and sales salaries expense, 1517. The sum of those two debits when you do your journal entries for payroll is going to be equal to the total gross pay. So we can just phrase it this way, and that would be that we can say that the gross pay is distributed over two expense accounts. If there was no such distribution, we would simply debit salaries and wages expense for $37.40. But we're going to split it so we can identify kind of like the cost of who works where and what the company has to pay in the different cost centers. Now, with respect to the obviously, oh, look at that. There's no state income tax in this problem. Well, you know that's not true in Massachusetts. You're at about a 5.5% income tax rate, a flat tax rate of about 5.5 or something. It's dribbled up and down a bit recently. Now, when we look at OASDI, we know these are all taxable because nobody's over the top. Okay, so I can just simply make life quicker for myself, given that nobody's over the top. We know that all of these amounts earned are going to be taxable because nobody's over the 117. So I can just make things a little quicker here by just popping those numbers in. That's what, 1155, and then Bird. All of his is going to be taxable at 442, and all of the other guy, 1068 for Chen, 1068. Just get these in here now, and Jay Shaw is, where are we here? Jay Shaw, taxable earnings, current gross pay, 1075. 1075. If you were in Excel, you'd be able to just do your formula and get the solution very quickly. But here we have to 1155 and just get it out of the way, right? 1155 plus 442 plus 1068 plus 1075 equals 3740, which should be the 3740. It's all taxable. You see what I mean? Because nobody's over the limit. All right. Now, I entered these in for you. When you do your problem, you have to enter this stuff in by yourself now. There's no state income tax. So what we have to do is, again, reference to your percentage. The OASDI is 6.2%. So you have to go into your calculator. And I like to take, and I'll show you, let me grab the calculator for you. Okay, so, hang on there. Okay, let me just drag it over. Doesn't want to go with me. Here it is. Okay, so what we do here is we take the taxable earnings for OASDI, so that's 1155. So that if I put 1155 in there, I'm not sure how this calculator is programmed, but to take 6.2% of a number, I think that's the multiplier, isn't it? So it would be times 0.0625. That's 6 and a, oh, not 5. Get that out of there. Okay, I'm sorry, 0.062. Okay, so you multiply that out and you're going to get 7161, and you're going to pop that number in here, 71.61. That look right? And now the Medicare, all 1155. So 1155 in my calculator is taxable. I can clear all this out of here, right? I could take the 1155 times over here 0.0145. That's 1.45%. Okay? And then you hit your equal sign. So we'll round it to 1675. So here we are knocking in the Medicare tax for 1675. 16.75. So that's done. Everybody contributes $35 to health insurance, Blue Cross, Blue Shield, okay, whichever your company is. Normally they have a total deductions column, but they're going to go right to the net pay. So how do you compute net pay? Well, what you do is you take the gross pay, which you know is $11.55, all right? And apparently you're going to have to subtract out each deduction. So let me clear this and I'll show you. We are $17.50 into it, and I'm going to stop here after I do this, and then you'll be on your own because it'll just take much too long to complete it. But you start with $11.55, 1155, and you subtract each deduction. So you got federal income tax. So you're going to hit the minus the federal income tax, okay, and then hit minus again for the OASDI, 71.61, and then minus the $35. Minus the $35, and that should give you your net pay. Again, you started with your $11.55 gross minus the 3 deductions, and that would bring you right down to the net, which should be $928.39 for this guy, 928.39. And honestly, guys, I don't think I have to finish this for you. We're not asked to put a check number in, but typically we're going to pay by check from a bank account, and the check number will automatically get printed onto the payroll register. Mind you, this is done by computer in most systems, but I need to give you, for your sake, a background on the intricacies of some of the intricacies of payroll accounting and payroll record keeping. So the rest of this job is for you to do on the assigned problem, which will be 7A3 right out of the textbook. And again, you've got to put all these numbers in as I did in the previous video. So you know how to do the top half. Now you know how to do the bottom half. When you're done, you want to prove your math. Okay, don't look for anything to put in state income tax, because there is none. Don't look to put in anything taxable for this, at least for this particular problem. So you're going to get your totals across the board. Okay, and one thing you might note is that if you took, right, your no, they don't have a total deductions column. Okay, so typically they would have a total deductions so that you could do total gross minus total deductions would equal total net, but you simply have to get your total net in down here. Okay, well, good luck. I hope this helps. Again, I don't think there's any need for me to do this in more detail. I'm sure the two videos together, which are long unto themselves, have provided you with enough to take care of problem 7A3. Not only that, you know, when you come to your exam, there's a lot of the detail that we're going through here is going to show up in all those multiple choice questions. So good luck with it, and I hope you use this stuff. Completed solution. Let's see what happens. Whoo! Okay. So that's what it would look. That's what yours would look like when you're done. Okay. I don't know if I got this thing right or not, but I don't even remember. It looks different. Maybe the earnings are different. I don't. Yeah, they drive you crazy. Every problem comes up in a different. Anyway, you're all set, guys. But this is what your problem is going to look like. So if you want to just stop your video at this point and check it out with your solution, that's what you're going to see. Save the name changes, save the amounts. All right, guys, I'll talk to you soon. Good luck.